In today's video, I'm going to show you 3 stocks that are in the real estate sector and consumer staples that are going to get you through not just year 2023, but for how long you want to be invested in dividends. Let's get into it. The first stock we're going to get into is ticker symbol ORC, and the benefits of this one, which this is the first and only one, is that they pay dividends monthly, and currently it's sitting at about $10 per share, and it's at 16 cents monthly by how many shares you own. So getting to the point, if you want to start out slow, which I recommend, getting dividends is more of a longer term play. I'd strongly advise getting at least about a comfortable level of $2,000 into each one of these to start actually getting some bigger ROI. And at the end of this, you'll see the totals will reach easily $2,000 a year, with only being invested $6,000, which is surely over that 8% mark of return on investments. ORC is a company making money pretty much off interest, and it does have a lower revenue, so I don't really love this one. It's more of my risky play, but it's something that I can see if you get a good buy-in, set a limit order to buy at about 10% drop, and get in at a comfortable level. This is where you could play it for a quarter and make more because it's a monthly paid dividend. The next one on my list is RITM, ticker symbol. This is also a real estate company, and they make their money purchasing and guiding through real estate. This stock now has actually succeeded in kind of the resistance level of this past year even, which I'm invested this one myself, and from watching it drop from roughly around $11 only down to $8, which sounds like a lot, but if you've seen a lot of the other stocks right now currently in the market, because we're for sure in a bear market, you'll see that a lot of them have lost more than 50% of their share. And this is one that is also, like I said, invested into the real estate, just like the ORC ticker symbol, and it's companies that are having a stronger revenue. This one's sitting at about a $4.2 billion market, a revenue, which I like a lot better. Typically you want to trade safely with market caps of above $1 billion, and then for sure always look at their earnings calls and watch out for their guidance, how much operating income, how much debt they're going into, and what's it for, because some companies, even Apple, will put, or actually Disney just went with one, they'll put more in debt, but if you see what they're going forward, if you see the advances and a stronger product or more income, well, then that's up to you to make the call. The third company kind of goes into two. I kind of dabble between AT&T or Apple, which these two have been around for 10 to 20 plus years. They have strong market shares, they have high market caps, and they've already got thousands of shares open in dividend trading. They do both offer 28 cents on AT&T, and Apple is currently giving 23 cents per share. Now they're doing quarterly, just like RTM is, but like I said, if you don't want this to be your main focus in investing, then keep this as a side portfolio and you just work your way towards it. But if you can get to the level like I'm showing by example, if you can get to the $6,000 just in general level of investing, you are getting a return of $1,800 to $2,000, especially if you buy in at the right time or set limit orders, which I strongly recommend, because where we're at with the market right now, the Fed's decision, there's current layoffs happening. These things do, create volatility and create catalyst to happen for negative swings, which you need to be prepared for those. And at times, dividends don't typically see such a dramatic drop like other stocks in some sectors do. Out of all the three, I would say ORC ticker symbol is a little bit more risky, but like I said, you follow it just a quarter by quarter, because you do have to stay with a stock for a full quarter to receive that dividend. And it's one I like just to play around with. The most safe ones you can do are this AT&T, Apple, and Ritm ticker symbols. Those have so far have shown the best, return investments. AT&T lately has also seen quite a bit of volatility, but I will say, like I said before when we talked about ORC, you have to plan for this and watch the news, follow the earnings calls, and listen for guidance. And always do not just buy because you're looking at that stock. Remember that they typically fall more than they do go up, any stock. And especially when you're in a bear market like this. This is not for a quick trade. And this is for surely not like most of those YouTube videos where they're like, hey, this is how I make $100 a day. Okay, true, you can make $100 a day on dividends, passive income if you will, if you have pretty much over $100,000 invested. And yes, that's mainly our goal, which with some of these, they're long-term goals, and depending on your allocation, that's kind of where you want to be. I believe that the dividend is more of a safe portfolio that is kind of held on the side. This is not where I involve, the typical day-to-day consumer staples and energy and healthcare stocks. This is more of you leave it alone and you check in with it, and you see where you can, if possible, after the next quarter, where you can sell and get back in at a 20% below drop. So like I said, you have to build yourself up with dividend stocks. It isn't, allocation to long term. This is not something you make $1 million the next day like most of these videos will try to show you. I want to actually help you guys build money safely and how to get in at the right time. Not just to dive in, do your homework, do your due diligence, and figure out the best time for you to get in. But with a dividend stock, like I said, you don't see this big dramatic drop. There's also, I'm going to do another video on blink charging, because this stock, I don't know how it did it. It's got a lot of up for strong revenue and future since of everything that's going on with EVs and laws coming out within the next 10 to actually 20 years. They could build them up for a strong return. And they're one of those stocks that have 2022 year that we've had, which has been pretty rough, and with the layoffs and with the earnings coming in negative, and the Fed decisions, I don't see this 2023 just blossoming. I see it being rough a little bit and maybe clearing out to the end of 2024. But if you found this video useful and you like to follow more of my trades and more of my information, be sure to like, subscribe the video, add to the channel. There's also a Facebook group. It's up top, and go ahead and check out the I American clothing line too. It's up top in the header. I'll see you guys in the next one.